So while I'm bullish on all things real, including hydrocarbons, it's the kind of thing that's economically sensitive. And so in the near term, there's a concern as the world adapts to Trump shock and the economic knock-on effects of that are felt and work their way through the real economy. That's near-term bearish on oil and even copper, which I'm very, very bullish on, even more so than oil. But in the near term, as these shocks work their way through, let's just say there's reason to expect some shopping opportunities in the near term for these economic inputs, even the most critical, vital industrial inputs like oil and copper. So that's one thing. It tells us something that's even, hot exchanges in the Middle East can't get oil above 65 bucks a barrel. It tells you how much oil there is out there. And, OPEC sort of reopening the floodgates, even though prices were still down, that's really something. So, investors, beware of this. You can't just buy into the big macro thesis. Oh, money printer go burr, therefore buy everything else. Maybe if you're very patient, that works out, but in the near term and in even the year or two ahead, that may not lift all ships. So, we started with the big macro picture. My outlook is inflationary going forward. That's bullish for everything real. In the near term, or actually not just like tomorrow or this quarter, but in the next year or so, I'm much more discriminating in what I want to invest in. And so I'm not willing to just go from the theory, or like our friend Rick Rule likes to say, don't confuse the inevitable with the imminent. And my riff on that is, forget about inevitable or even imminent. I want to know what's happening now. And so what's happening in the near term is actually near-term bearish for other commodities, but happily not bearish for monetary metals, gold and silver. And there is one exception, and that's uranium. I don't know if you want to go down that other yellow metal road or not, but it is an industrial input. It is an energy mineral, and sometimes spot uranium prices get whacked around by, there's sort of the macro narrative. Oh, this is bad for energy, but the facts are, if you look at it, uranium has gone sideways to upwards in 3 of the last 4 recessions, and the one where it didn't, that was after the 2007 big spike in uranium, and so it was already sliding down sharply when the crash of 2008 hit. So arguably, the one time that uranium dropped during a recession, it wasn't because of the recession. It already was.